All right, guys. Sound check again. Can I confirm that we have audio, and then we'll get started? Okay, folks. So once again, we are monitoring the ECB's rate decision. Last time out, we were surprised. We all thought that Mario Draghi, the new ECB president, was Germany's man. After all, before the November 3 ECB meeting, we all thought that Mario Draghi was going to take his cue from what the Germans want. The Germans want to focus on inflation even though there's no inflation. The Germans do not want to risk that inflation ever comes up. Now, what did Mario Draghi do? We were surprised. He saw that there was a need for liquidity, so he cut rates. And now, here we are again. Over the course of the week, we've had a lot of rumors about what the ECB is doing. We will find our resolution on this in today's meeting. Let's just go through the rumors that has been going around. Of course, the biggest one is that the ECB was actually preparing for a massive rescue plan, a 1 trillion euro rescue plan, just as soon as the different ECB or the different EU countries agree that they will adopt a closer fiscal union, that they will agree that someone in Brussels can go to the books of a country, can go to its balance sheet, and can say, hey, you're spending too much on social services, you're not collecting enough taxes, your debt levels are beyond the 3% limit. And because you're doing this, we're going to penalize you. We're going to penalize you. Once the rumor has been that once we have the European officials, European politicians agreeing to this, then the ECB will decide to put money on the table. Will decide to do this 1 trillion euro rescue plan. Excuse me. Now, what are the other things that we're looking for? Other things that has been discussed is just how long will the ECB continue buying the bond of European countries. Hopefully, we will get some resolution to that question today. Remember that the position of the ECB, or rather ECB officials have always been saying that it's not in their mandate to buy the bonds of different countries. It's not in their mandate to rescue the different European governments. Okay? However, they are saying one thing and they're doing another. Despite saying this, the past couple of weeks, we all know this, the ECB has been buying the bonds of Italy, of Spain. In fact, some estimates put it at around 6 to 8 billion euros of government bonds are being bought by the ECB. And when you look at the money trail, when you look at the details of the operations of the ECB, it is clear that some of these purchases have not been sterilized, meaning some of this euros that comes out when the ECB buys bonds are still there in circulation. They have not been sterilized. They've been introduced to the financial system. They're circulating in the financial system. So that's one more sign that despite Draghi's reputation about being more German than a German, he's actually very much concerned about what's happening in the Eurozone, and he's willing to do what the Americans are doing. He's willing to print money to try to arrest the situation. Okay? So, what else? At the start of the week, no one was talking about rate cuts. The only extreme elements, people were looking at the more extreme elements as thinking rate cuts. As early as this morning, during the Asian session, the market's opinion was still for steady rates. But that opinion has changed, and now we are anticipating back-to-back rate cuts by the ECB. Okay, so that said, we're now expecting a rate cut. Later during the press conference, we would also want to hear from Mario Draghi. We would want to know if, at least get some hints from him, whether the rumor about a €1 trillion rescue plan being in the works as soon as officials get their acts together, as soon as politicians get their acts together, is true. Okay? Now, let's discuss those details, those specific items in a while. But let us take a look at the charts now. Now, classically, when you have a rate cut, what is the market's response? What is the textbook response? Economics 101 tells you that if a country has lower interest rates, then its currency should be weaker. And when you have rate cuts, you do get to see the currency of that country drop. So did we get a drop in our euro last November 3 when we saw a rate cut? Let's take a look at our charts. Where is November 3? Where is 12:45 GMT? There you go. Excuse me. Excuse me. There we go. Last ECB meeting was in November 3. And what did we get? We got a surprise rate cut. We got an eventual sell-off in the euro. Fine. Now, that was a surprise rate cut. And today's rate cut is not much of a surprise. Why am I saying it's not much of a surprise? Because if you look at the FX Street calendar, you're going to see that it says there, okay, it's still actually at 1.25%. But at the moment, we actually have the market beginning to change the consensus forecast. When you look at Bloomberg's consensus now, the Bloomberg consensus now calls for a rate cut to happen. So this is not much of a surprise. And if it's not much of a surprise, what is my main concern? That instead of actually getting a sell-off, we might get buy the rumor, sell the fact. Johnny, I'm not sure if there will be a rate cut. But the calendars that I normally use have changed through the course of the week. From no rate cuts to most of them saying we're going to get a rate cut. Okay? So because of that, I'm thinking as well, maybe a rate cut will happen. We will get back-to-back rate cuts. What I'd like to know now is, did we get a buy the rumor, sell the fact movement from the market? Last time the situation didn't look much less dire. I wouldn't say that. Remember that last time there was no threat of a across-the-board downgrade by ratings agencies. But now S&P has threatened across-the-board downgrades. We've already had a failed bond auction once in Germany. So I think the situation now is actually a lot worse than the last time out. But in any case, let us. Oh, thank you, Suleiman. Yeah. Oh, and that's a good point that Suleiman is telling us there. Before the November 3 meeting, when European countries were borrowing, were issuing bonds, they were paying yields that are a lot less than where they are right now. Remember that the bond yield for Spain, or sorry, not Spain, but for Italy, has jumped by almost 3% over the course of the month of November. Same thing happened to the rest of them, maybe to a lesser extent. Even Germany's bond yields have gone up by 50 BPS compared to where they were last October. So I'd say that funding has gotten to be more expensive. All right. Now, I guess the next question is, so did we get buy the rumor already? And when we look at the chart, it seems that we don't have much buy the rumor. We spent the trading day congesting in Asia, going to the open of the European market. We sold off some. Since then, we eased off a bit, but there's no large sell-off here. This is really making it difficult to figure out what to do. So, what do we have in our charts? I look at this, and when I take a look at the big picture, we've been stuck in a congestion over the last couple of days. We are below EMA lines, and when we look at our indicators, we do have sell signals. Okay, I'm not going to change my charts because whenever I change profiles, something happens. So let me just drag your USD here. So when you look at your indicators, you're bearish in the intraday picture, you're bearish in your 4-hour level, you're bearish in the daily stochastic. Now, we all know this. Indicators do not work when there is data. I'm not going to make my decision later on based on the indicators, but I wanted to show that even without this rate announcement, we have a bearish bias as far as the technical picture is concerned. We're getting rejected from EMA lines. We have sell signals in the lower time frames. So, to me, add to that a rate cut, and there will be pressure for market to ease off. There will be pressure for the euro to weaken. Again, textbook says countries with lower interest rates should have weaker currencies. And previous price action has already showed us that we do get to see the euro drop when a rate cut happens. All right. So we haven't seen buy the rumor, sell the fact. We've been mixed throughout over the last couple of days. We've been mixed today. We've dropped a bit, but we haven't really seen a follow through from your breakout of the congestion, of the floor from Asia's congestion. Okay, now what? The easiest situation that we can find ourselves in would be if we were to get a rate cut of, say, 50 BPS. Remember that consensus is somewhere around 25 BPS. So if we get an aggressive rate cut, 50 BPS, I think at that point, we can look at this as, wow, that's a big surprise with the sell side. We should be bearish in our euro. As a knee-jerk response. Why am I emphasizing that term, knee-jerk response? Let's put it this way, folks. Over the last year, over the last 2 years, one relationship that we have seen from the market is, if the stock market goes up, what happens to the currencies? Okay? I haven't computed the correlation, but all you have to do is look at the chart. When the stock markets go up, your currencies would typically see or you would typically see your euro, your GU, your Aussie going up, getting some risk appetite. And that is my main concern. Although textbook or Forex Economics 101 tells us that a rate cut would mean weakness for the currency, that same Economics 101 textbook also tells us that a rate cut will be good for the stock market. Why is it good for the stock market? Because cheaper money. With cheaper money, it is easier to speculate. With more money in circulation, people will be forced, or with lower interest rates, people will be forced to look for where can I put my money and make something out of it. So people decide, okay, I better invest in the stock market. And here is where the problem comes in. And here is where quickness of mind and a close monitoring of price action becomes very necessary. Because over the last 2 years, the relationship has been 90% of the time, or at least 80% of the time, if the stock market is up, then your euro, your GU, your Aussie would also go up. Johnny, exactly. The idea would be to look for a pair where you can get one side that's really considered to be a risk currency. Okay? But it would be better if we can look at some evidence, see for ourselves, see with our own eyes what the previous market response has been. So let me pull up my other chart and let us review what happened last November 3. All right. So we have here what? We have here the chart for our Euro November 3. This is not right. Okay, give me a sec, guys. Something seems to be wrong with that chart. Oh, okay. Yeah. That was the right chart. Sorry. That is the correct chart. It's just that this is not GMT-based charts. That's why I was curious about the time. This is not GMT-based charts. So, November 3, we had a rate cut, and look at what the market's knee-jerk response was. We had a sell-off. We had a sell-off in our euro. I wonder if we can see this from the 15-minute picture, because I want to show. I want to show the way markets reverse itself. Okay, the platform is loading data. Oh, there we go. So there we go, folks. So there we go. Here is when we had our rate cut. Okay, this is not in GMT, so I'm sorry that for the confusion. Here's when we had our rate cut. Knee-jerk response of the market was sell off, sell off, sell off, sell off, sell off, until right about the time when the U.S. market opened. And what happened? U.S. market opened, we started to rally. Why was this? Because around that time, we had the stock market open, and what did the stock market do? The stock market decided to go up. And let me just bring up a chart. I did open the right contract. FSDX Z1. So let me compress this. Oh, there we go. Looks like it's still just loading its charts. And my equity indices won't go back all the way. Let's just look at this from the hourly level. And let us wait for those charts to load. All right, guys, let me just check the correspondence of this of the data. Sorry, folks. Looks like there was a problem with the data. But what I'm trying to show you here is that one of the potential problems that we will have later after the rate cut is the possibility of a sudden turnaround. Why the sudden turnaround? Because once more, whenever you have a rate cut, people start thinking, hey, rate cuts are good for the stock market. And if the stock market goes up, what happens with the currencies? You start getting your euros, your GUs to rally. Okay. Looks like the overlay function doesn't may not. Okay, this is not. Okay, I know what to do. The overlay function has a problem since the CFD contracts that I'm looking at are limited to not 24-hour markets. And the currency charts that we're playing are 24-hour markets. So they are not fitting together. So I'll just show you the daily correlation. So again, whenever the stock market goes up, there's a strong correlation of your currencies also going up. So that orange and green bars that you're seeing, that's S&P 500. I wanted to use the Euro Stock Index, but I forgot about that problem between the different time frames. But in any case, I'm just showing you the correlation, and that is why I'm concerned that, or rather, that's why I'd like to emphasize the need to keep a close eye if you intend to do a textbook response, short your euro against the dollar, against the yen, on a rate cut. Okay? Problem is, after a while, stock market begins to go up. And once the stock market begins to go up, your currencies are likely to reverse their sell-off. Okay, this relationship has been going on over the course of the last two years, that it would be folly for us to ignore this relationship. Now, Johnny has given us a nice solution. Why not just look for a pair where the other currency is considered to be a risk currency, and the other currency, your euro, could be expected to weaken against a riskier or a higher risk currency. And and the suggestion is, all right, why don't you go EUR AUD? Well, let's see what the EUR AUD price action is then. How did EUR AUD behave in the last rate announcement? I think it would be faster if I just use the other server. Well, what do we have, guys? EUR AUD, November 3. We had our sell-off, but it looks like after selling off quickly, we still ended up bouncing back up. Okay, what are the other options? If you can't get EUR AUD, what's the other risk currency that we have? your Canadian dollar. Okay, so how's EuroCAD doing, or how did EuroCAD perform? EuroCAD was even worse. You ended up not just reversing but actually rallying. Okay, so moral of the story here then, folks, is this. When you look at, or when we should be getting that rate decision in a minute. So we better go back to monitoring. I almost missed that. Sorry. Sometimes I just talk myself to death. Okay, guys. So we have our rate decision in less than a minute. Again, knee-jerk response for us would have to be for a sell-off if there is a rate cut. But keep a close eye on how the stock market is doing, since you risk a quick turnaround. So guys, we are expecting a 25 BPS cut. If we get 50 BPS, we should be getting a sell-off. If we don't get a rate cut, that would be very disappointing for the market. And we should be getting that now. The ECB is never late. Okay, interest rate cut to 1%. We're not getting any immediate sell-off from the market. So did we get buy the rumor, sell the fact after all? Does that mean that because of this we should start buying? I would say let's hold off on buying your euro. We did not get a big sell-off before the release, so we cannot say buy the rumor, sell the fact is in effect. So guys, let's not get caught up with the initial response from the market. Remember, you do buy the rumor, sell the fact if you did see a big downtrend. And going to this release, we barely sold off in our euro. So the most appropriate thing for us to do, stay sidelined. Perhaps now we wait for the press conference in about 45 minutes. We see from there if there's any truth to the rumored trillion euro rescue plan that the ECB has been crafting. But as far as this rate decision is concerned, it appears that markets are not really all that excited. They expected this to happen from the start of Asian markets. It's not a surprise, so we're not getting a sell-off. But they did not price in a rate cut. They did not give us a big sell-off before this. So neither can we think about doing the opposite. Neither can we say let's buy the rumor, sell the fact. Neither can we say it's time for euro to go up, because we never went down in the first place. We were just playing a range. Thomas, I'm just watching Bloomberg TV. It's a lot faster than unless you can afford to shell out $1,700 a month. Yeah, if you can afford to shell out $1,700, get a launch pad. I actually use an advisory service, but they're much more slower. Okay, so markets are not moving, and I don't think that it's going to move now. So we will have to wait for the press conference. Now, what are the things that we want to hear from the press conference? I think that with the rate cut, it is clear that Mario Draghi's main concern is how do we get the economy going? How do we fix the economy? Which means that it is not out of the question for the rumored trillion euro package to be true. The only thing that's needed is for Eurozone politicians, Eurozone officials to agree that someone in Brussels will have the power to look at their budgets, to look at their spending, and to sanction anyone who violates the deficit rules. Any attempt to rally at this point, I think we should just ignore. We need the stock market to go 1% at least if we are going to get all excited about the rate cut. And if we look at our equity indices, what are they doing? They're not moving anywhere. Okay, I see FTSE stuck at 0.39. I see CAC 40 stuck at minus 0.19. So people are being cautious. People are not really doing anything. Best to wait for the press conference. And again, during the press conference, we will watch out for a discussion on just how much bonds the ECB is really willing to buy. If the ECB confirms for us that, like the SNB, they're willing to do anything, then bond buying in the end would actually have a negative impact for the currency. Remember that the ECB's capital is only around 10 billion euros. At least the last time I checked. So the money that they're using to buy up these new bonds would have to come from somewhere, and that somewhere would have to be coming from freshly minted money. Okay, we already know that some of it is freshly minted because they haven't been able to sterilize all the bond buying that they've been doing. Okay, so if we can get Mario Draghi, there's so many Marios right now that I sometimes confuse Monty with Draghi. If we can get Mario Draghi to confirm about the rescue package, how are we supposed to react? The announcement of a ready rescue package that only needs the European officials to agree to greater fiscal union, European politicians, not the technocrats' problems, it's the politicians which are the problem. If we only get the politicians to agree to greater fiscal union, if Mario Draghi says they will do something once greater fiscal union is assured, then knee-jerk response would be for us to expect the euro to strengthen. Relief rally is what we would call it. But up to how much? Remember that, again, even if the ECB comes up with €1 trillion, this is just like the U.S. Printing, or the U.S. Fed printing more dollars. And if more dollars gets printed, what does that mean for us? For us, it means that, or in this case, more euros gets printed. It means that eventually the currency should weaken. So, knee-jerk relief rally would have us thinking at most we can look for our congestion highs around the 35, 36 region to be the potential target at most. And I'm using the term at most here. Okay, not at least. So at most, we would look for a knee-jerk rally towards this resistance area. But afterwards, what would I look for? Afterwards, once the idea of freshly minted money sinks in, I would focus on even greater long-term weakness for the euro with freshly minted money. Besides, even with €1 trillion of freshly minted money, there are no guarantees that it would be enough to rescue the Eurozone. It would be enough to turn around the economies. Remember, folks, that the problem in the Eurozone is not the lack of money, but the problem is more structural. difficult to fire people, expensive, I don't know what you call your health programs are in Europe, but very expensive health programs, unfunded future liabilities. Good question. Normally, a dealer in a bank would think this is good news, this is bad news, and he can move prices. He can set the price, okay, euro right now is at 34.11.12. He can set the price to 34.30, 34.50. And if he's right, then the market will follow him. Okay? And if the market follows him, he makes money. But if the dealer moves the price because of news, and it turns out that his analysis is wrong, meaning the other dealers do not reprice their euro to somewhere near his price, what happens? He gets he gets arbitraged out of the market. And that dealer would probably be losing money. That dealer could probably get fired. So, I know people say it's retail traders, but in news events like this, Joanda, by the time it gets to us, the dealers would have decided already what to do. There are for fee services that's supposed to give you the news a second or two ahead of the general release, but those are used by traders who employ algorithmic trading systems, meaning the data goes to their computer opens a trade for them. They don't even think about it. They already have their conditions set. If data comes out this high, then the computer buys automatically. There are services that work that way, but you can't really think about it. Manual, you're better off just watching TV. It's free. Ryback? Well, I would say yes. They're doing it on purpose. But you have to remember that if they do it on purpose and they're wrong, they lose money. Okay, so I'm not saying that the dealers want you to lose money, because if they move prices off what markets are or off where the general prices are, they risk also losing money. Someone could hit them. It's just like having an off quote. Okay, I don't know if off quotes still happen, but if you're familiar with off quotes, say working rate is 34.17 and all of a sudden your platform says 34.30. In the interbank market, you quote 34.30 and it's a live price. Someone else will come in, decide, oh, I'm going to sell it. Whoever quoted that is wrong, and I'm going to make 15 pips. I'm going to sell it at his 34.30 and go to another bank and close it at 34.15. And I'll make 15 pips. That's called arbitrage. And that can happen to a dealer who moves prices and the rest of the market doesn't follow him. Yeah, I know about that. You get bad news and all of a sudden market does not follow textbook on where things should be going. But remember, these days, we're not actually following the textbook. These days, we're all following where the stock market is headed. By the way, I see that DAX is now up 0.58. So I'm actually thinking, this is starting to get interesting. Yep, Suleiman, thank you for the notification. Yeah, I just noticed DAX is now up 0.68. I'm actually thinking, is it possible to do something about it? Technical setup is looking bullish now from the hourlies. 4-hour charts are looking bullish as well. Maybe. But my experience from the market lately has been if you trade the breakout, you lose money. So what am I planning? No breakout trades for me. But if the equity markets continue to stay firm, I will start fishing. I will start going buy on dips. As long as those equity indices remain firm. Well, sometimes these guys could actually even trade against each other. That is why I'm sure you've heard about voice brokers. Okay, what are voice brokers? These are the people that banks would call. I want to buy 100 million this, 100 million that. I don't want to buy it directly from another bank. They go through a voice broker. That is to make sure that the other bank is not reading what they're doing. Okay, so there are, in many instances, these banks will be trading against each other with different positions. It becomes a question of, is this bank trading long term? Is this bank trading short term? And if you're trading short term and the other bank is trading long term, they could probably end up making money. But there will be instances when they could be trading against each other and they're hoping to make money from the other bank. Maybe the chief dealer in the other bank has offended the chief dealer in Bank A. And that actually happens. Vince, well, these days cutting rates means the stock market goes up. So if the stock market goes up, we start looking for risk appetite. Anyway, guys, I think I've run out of time, and I think Mr. Ponce is already in. So thank you for joining, and I'll be signing off.